So, you've got the land and you're thinking about leasing it for a wind or solar project. That's great. Renewables can provide steady, long-term income for landowners. But there's one thing that confuses many people at the start: taxes. In this video, I'll explain in plain English how you get taxed, whether you should form a company, and what are APR and BPR. By the end, you'll understand the main taxes involved, how to structure efficiently, and what to ask your professional advisors. If you're new to this, let's start with the main setup options. The big three are sole trader, limited company, or a trust. Sole trader is simple. It pushes income through personal tax bands. A limited company offers flexibility, liability protection, and can help you with financing. A trust is powerful for estate planning and best set up before planning permission to maximize APR and BPR. Trusts can pass land or projects income between family members, but they need careful professional setup. They interact with income tax, capital gains tax, and inheritance tax, and some have periodic charges and higher income tax rates for trusts. Handled properly, trusts can secure long-term family wealth and strong tax efficiency. There are several taxes landowners should know about for any renewable energy project. First up, income tax. If you lease land personally, that income is taxed as normal income. Up to £12,570 is tax-free, then 20%, 40% and 45% tax applies above £125,000. Cross that level and you'll lose the allowance entirely. If the project rents are significant, your tax bills climb fast. Another reason entity choice really matters. Next, corporation tax. Setting up a company can sometimes reduce your overall tax liability. Profits are taxed at 19% or 25%, and you choose how much to withdraw as salary or dividends, leaving the rest inside the company. But many turbines or solar rents are classified as passive income, so check with advisors that the structure fits your goals. You could also discuss with your developer about taking a more active role in the project to expand your range of options. Inheritance tax can hit farmland, but specific reliefs can reduce the bill significantly. Inheritance tax is 40% above the £325,000 threshold, unless agricultural property relief applies. APR protects farmlands from large inheritance tax bills, but only on agricultural value, not the extra uplifts from turbines or panels. From April 2025, land on the environmental schemes can qualify, and from 2026, 100% reliefs only apply up to £1 million, and above that, it's 50%. It's complex, but APR can stop inheritance tax becoming a major burden for farming families. Business property relief, or BPR, can reduce inheritance tax for qualifying trading businesses. Simply leasing land isn't trading, but if your renewables and farming operate as one active business, you can qualify. As with APR, changes from October 2024 and the budget means that only the first £1 million qualifies for 100% relief. The £1 million threshold is combined across APR and BPR, and above that, the BPR relief is available at 50%. Capital gains tax, or CGT, is charged on gains when you sell or transfer land that has risen in value. The annual allowance is £3,000 per person. Move land into a trust, and you may defer capital gains tax using holdover relief, paying later when the asset is eventually sold. Early planning here can save significant tax over the long term. Most land rent is VAT exempt unless you opt to tax. If you opt to tax, you'll need to charge VAT on all rent. Crossing the VAT registration threshold can also push farms out of the agricultural flat rate scheme, so specialist VAT advice is recommended. Solar sites often allow grazing beneath panels, supporting our APR claim. Wind turbines take up less ground area but may interfere with farm operations. Either way, agricultural property relief only covers agricultural value, not the uplift from the energy project. The gap between the basic agricultural value and the value with the renewables project is usually significant. Councils are usually exempt from tax on rent, unless they have set up a trading company. For charities, placing land into trading subsidiaries, then gifting profits back, can make income tax deductible and efficient. As projects get bigger and energy bills rise, your tax bill can increase. Not always a bad thing. You can often index-link rent to inflation to keep income steady in real terms. As with all taxes, plan ahead and review your structure regularly to stay efficient. Building your own project means more risk, more cost, but potentially more reward. You'll handle planning, grid connection, construction, and project management, but you'll keep more profits. Plan for VAT recovery, for capital gains, and for any inheritance tax implications. Taxes shouldn't scare you off renewables. They just need to be factored into your project plan from day one. If you're considering a project, check the description below for our detailed report on the future of renewable project payments. Get the right advice early, pick the best entity, and structure your lease smartly. Thanks for watching. If you found this video helpful, please hit like, subscribe, and share with others who might be asking the same questions as you.